What if one simple financial decision today could completely transform your future wealth? Most beginners never discover this secret until it's already too late. Investing isn't gambling. It's planting tiny financial seeds today that slowly grow into enormous wealth through patience, smart decisions, consistency, and time. While many people buy things losing value, successful investors quietly purchase assets that continue earning money long after every purchase is forgotten forever. The biggest advantage isn't earning huge salaries. It's allowing investments enough years to multiply themselves through the incredible power of compound growth. My name is Comson. Welcome to my YouTube channel. Subscribe, like, and comment where you're watching from. And share this video. Together, we'll build lasting wealth through investing wisely. Today, you'll learn exactly how beginners start investing safely, avoid expensive mistakes, and build wealth using methods trusted by successful investors worldwide. Many beginners wrongly believe investing requires thousands. Actually, even small monthly investments can become surprisingly valuable after enough years of consistent contributions. Imagine investing only a little every month. Consistency matters far more than starting with huge amounts that most people simply don't have. When purchasing shares, you're buying tiny ownership pieces inside real businesses. As businesses grow, your investment can grow alongside their long-term success. Great companies create products millions love daily. Investors benefit because successful businesses often increase earnings, expanding company value steadily over many years. Instead of choosing only one company, beginners usually reduce risk by owning hundreds through diversified index funds that spread investments automatically everywhere. Diversification protects investors because not every business succeeds equally. Owning many companies lowers risk while still capturing long-term market growth over decades. Compound growth means your profits begin earning additional profits. This snowball effect becomes dramatically stronger the longer you continue investing without stopping consistently. Think about rolling a tiny snowball downhill. Investing works similarly because your wealth accelerates naturally after years of patient, disciplined financial habits together. Time is the greatest investment partner available. Starting earlier often beats investing larger amounts much later in life for almost everyone consistently. Even your very first paycheck can become the beginning of lifelong financial freedom if invested wisely instead of immediately spending everything earned today. Legendary investors, including Warren Buffett, became wealthy through disciplined, patient investing instead of chasing quick riches or risky shortcuts promising instant success. Next, I'll show exactly how beginners open investment accounts, choose funds confidently, and avoid mistakes costing thousands throughout their financial journey ahead. Your first practical step is opening a trusted investment account. Choose a regulated broker with low fees and an easy, beginner-friendly platform. Small annual fees seem harmless today, but over decades, they quietly reduce thousands from your future investment returns through unnecessary expenses alone. Always verify your broker follows financial regulations. Security matters because your investments deserve protection while growing steadily through many future market cycles. Opening an investment account usually takes only minutes. Most platforms guide beginners through each simple step with clear instructions and helpful verification. After approval, connect your bank account securely. This allows regular investing without manually repeating the process every single month throughout your journey. Congratulations! Your account is ready. Now comes the important decision that separates patient investors from people constantly chasing risky opportunities everywhere. Many beginners ask whether to buy individual stocks or ETFs. Understanding this difference can dramatically improve your long-term investment confidence and results. Buying one stock means trusting one business. Buying an ETF spreads your investment across hundreds of companies, reducing unnecessary risks significantly over time. One famous example is the S&P 500 index, representing hundreds of America's largest companies working together inside one diversified investment fund. Instead of guessing tomorrow's winning company, ETFs automatically include businesses from many industries, helping investors stay diversified through changing economic conditions consistently. For many beginners, diversified ETFs offer an excellent balance between long-term growth, simplicity, and lower investment risk compared with single-company stocks. Choosing an ETF matters, but continuing monthly investments matters even more. Consistency creates powerful long-term results despite temporary market fluctuations and uncertainty. This strategy is called dollar-cost averaging. Investing regularly means purchasing more shares during lower prices and fewer during higher prices naturally. Nobody consistently predicts market movements perfectly. Regular investing removes emotional decisions and helps maintain discipline through both exciting and difficult financial periods. News headlines often create fear. Successful investors stay focused on long-term goals instead of reacting emotionally whenever markets temporarily decline or recover. Emotional investing frequently destroys wealth. Patient investors understand temporary declines are normal parts of successful long-term investing throughout every market generation worldwide. Successful investors like Warren Buffett, John Bogle, and Peter Lynch achieved remarkable wealth through patience, discipline, and intelligent long-term investment strategies consistently. Coming next, you'll discover beginner mistakes silently costing investors thousands and learn practical habits helping your money grow safely for decades ahead. Even great investments can disappoint if beginners repeat common mistakes. Avoiding these errors often matters more than finding perfect investment opportunities today. Mistake 1 is chasing popular investments after prices already exploded upward. Excitement often replaces careful thinking, creating unnecessary financial disappointment for beginners. Never invest simply because friends, influencers, or headlines recommend something. Understand what you own before risking your hard-earned money every single time. Knowledge reduces fear. Spending time learning before investing builds confidence and helps you avoid emotional decisions during uncertain market conditions throughout life. Before investing heavily, build an emergency fund. Unexpected expenses shouldn't force you to sell valuable investments at the worst possible moment unexpectedly. Emergency savings provide financial peace of mind, allowing your investments enough time to recover naturally after temporary market declines without unnecessary panic selling. Mistake 2 is investing everything into one company. Diversification spreads risk and protects your portfolio against unexpected business problems over many years. Owning different industries increases stability because businesses rarely perform exactly the same during changing economic environments and market conditions across decades together. Mistake 3 is fearing every market decline. Temporary drops have historically happened many times before long-term recoveries continued rewarding patient investors consistently. Market declines feel uncomfortable, yet they often create opportunities for disciplined investors continuing regular purchases instead of reacting emotionally with panic and fear. Automatic investing removes hesitation. Your money continues working monthly without depending on motivation, emotions, or perfect market timing decisions every single month. Small investments repeated consistently usually outperform occasional large investments interrupted by long breaks or emotional reactions to changing financial news and markets. Many companies distribute dividends. Reinvesting those payments buys additional shares, allowing your investment snowball to become even larger over future decades automatically. Reinvesting dividends instead of spending them immediately helps compound growth accelerate, increasing future wealth without requiring additional money from your personal income. Review your investments occasionally, not daily. Constant checking encourages emotional decisions instead of disciplined, long-term financial planning and patient investing habits consistently. Watching prices every hour creates unnecessary stress. Long-term investors focus on years instead of every small market movement or temporary headline daily. History repeatedly proves disciplined investors succeed by remaining patient, avoiding unnecessary risks, and consistently following simple long-term investment principles throughout decades together. Next, we'll build your first beginner investment portfolio step by step using simple strategies almost anyone can confidently start following immediately. Now let's build a simple beginner portfolio. Remember, simplicity often beats complexity when your goal is consistent long-term wealth through disciplined investing. Many beginners choose diversified ETFs as their foundation, while keeping emergency savings separate for unexpected expenses and financial security throughout changing life situations. Decide on a monthly investment amount that comfortably fits your budget. Consistency matters much more than trying to invest unrealistic amounts every month. Investing manageable amounts every month builds lasting habits. Strong financial habits usually create greater wealth than unpredictable bursts of investing enthusiasm alone. Automation removes excuses. Your investments continue growing while you focus on work, family, education, and enjoying everyday life with greater financial confidence. Successful investing doesn't require watching markets constantly. Your money keeps working quietly through automatic investing and patient long-term ownership of quality businesses together. Every investor eventually experiences market declines. Understanding they're temporary helps prevent emotional decisions that can permanently reduce future investment growth and wealth. Patience is your greatest advantage. Market downturns eventually end, but selling during fear often locks losses into your investment journey permanently instead. Many experienced investors continue buying during declines because lower prices allow every monthly investment to purchase more shares for future growth potential. History shows markets have recovered from many difficult periods. Long-term investors benefited by staying invested instead of abandoning carefully planned financial strategies completely. Continue learning throughout your investing journey. Knowledge improves confidence, helping you recognize opportunities while avoiding unnecessary risks and emotional financial decisions consistently. The best investors remain lifelong learners. Improving your financial education today can create benefits lasting for decades through smarter investment choices and discipline. Legendary investors achieved extraordinary wealth through patience, disciplined investing, and avoiding emotional decisions instead of searching endlessly for overnight financial success stories. Real wealth usually grows slowly. Ignore promises guaranteeing instant riches because lasting financial success rewards patience, consistency, and intelligent decision-making over many years. Your future wealth depends more on today's habits than tomorrow's predictions. Begin investing consistently and allow time to multiply your financial progress naturally. Remember these simple habits. Budget wisely, invest regularly, stay diversified, continue learning, and remain patient through every stage of your financial journey ahead. Financial freedom isn't built overnight. Every smart investment you make today moves you one step closer to greater independence and future opportunities for yourself. In our final chapter, we'll summarize everything, reveal your complete action plan, and help you confidently begin your investing journey immediately after watching today. Let's bring everything together into one simple action plan you can confidently follow immediately after finishing this video without feeling overwhelmed today. Step 1. Create emergency savings before investing seriously. Financial security allows your investments enough time to grow without unexpected interruptions from emergencies. Step 2. Open a trusted investment account with reasonable fees, strong security, and beginner-friendly tools supporting your long-term investing success from day one. Step 3. Choose diversified investments that spread risk across many companies instead of depending completely on one business succeeding over future decades. Step 4. Automate monthly investing. Small, consistent contributions build powerful financial momentum that becomes increasingly valuable with patience and compound growth over time. Step 5. Stay invested through market ups and downs. Patience often rewards disciplined investors far better than emotional reactions ever could consistently. Imagine two friends investing identical monthly amounts. The one starting earlier usually builds significantly greater wealth because time multiplies every invested dollar dramatically. Every successful investor once started with their first investment. Small beginnings often create extraordinary financial futures through discipline, learning, and consistency over decades. These respected investors followed simple long-term principles. Their remarkable success demonstrates patience, discipline, and consistent investing can outperform complicated financial strategies together. You don't need perfect timing. Starting today with a thoughtful plan can be more valuable than waiting endlessly for the perfect investment opportunity. Write your financial goals clearly. Decide your monthly investment amount and commit to following your plan, regardless of short-term market noise or distractions. Future wealth comes from today's consistent action. Keep learning, investing regularly, and trusting your carefully planned long-term financial strategy through every market cycle. Now, I'd love hearing from you. What's the first investment step you'll take after this video? Share your answer below today. Tell everyone what you learned today. Your comment could encourage another beginner to begin investing and build a stronger financial future together successfully. If this lesson helped you understand investing, please like this video, share it with friends, and support others beginning their investing journey today. Subscribe now and turn on notifications. Don't miss future videos where we'll simplify investing, personal finance, and wealth-building strategies for every beginner together. Remember, it's never too late to begin. The best investment time was yesterday, but the second best time is starting today with confidence. Thank you for watching. Subscribe for more finance videos, leave your questions below, and tell me how you'll begin investing. See you next time.